Well, hello everybody, I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets. We do it on a neoclassical perspective. Each time we ask ourselves just one question: what happened today? What does that tell us about the coming days? Do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel LA Little. Didn't have a show last night. Of course, the markets were closed here in the U.S., in Germany, but then most other markets were open, but not a lot of volume and not a lot happening unless you were in China, where they continue to go higher. Let's look at the ending numbers for today, though, because we had some activity today for sure. 2 weeks of up, the grind, all taken away. When they take it fast, they take it hard. That's what they did today. They dropped these things right back down. We'll look at the charts and see that. Gold also took a hit. Matter of fact, the only thing that didn't take a hit was bonds and the dollar. Dollar up another %. And so we actually should start there. So let's take a look at that. Let me grab those charts. We start with the UUP. The UUP jumps back over. Matter of fact, let's draw this out because it's kind of important. You know, we had a big, well, let's start with the other picture to start with here, right? We had a push down, a push back up, couldn't break higher. That leads to a larger pullback, and now the push back up. Now that we've got the push back up, the question is what does it mean? Well, what does it mean depends on what you're looking at. If you're looking at the ranges, and these are the two ranges, the retest regenerate zones on the way back up. What does that show us? Well, it shows us that the dollar has pushed right into that overlap, right? Or actually, it's not quite the overlap, but it's just the area between above this one, above. let me try to say it differently. I'm going to draw it this way. I'm going to take this area and I'm going to draw to that. That area right there is exactly where prices come. That is the retest, regenerate, bearish. In other words, if this is going to go down farther, if this move down isn't over, this is where you would expect it to fail and regenerate farther in that direction. So that's where the test is. That's what's being tested. If I bring it over here on a weekly, I had previously talked about 3 zones. There was the top one, there was the middle one, right, which was that bar, and then there was the one underneath it. Well, we got over it on Friday. We just peaked up above it Friday. The question was, would it be able to continue higher? Well, not only did it continue higher, it's now going into this bar, these 2 bars. I suspect it's going to get right to it. If it does that, which it would probably mean that you get over these bearish retest regenerates, that means you get rid of them. They're no longer in effect. And what does that do? That turns us into a range trade at worst. And what are you? You're right there at the cusp of the top 2 ranges. Get a pullback, and then what? Try to slingshot higher. That's what this thing's going to try to do. And so when I look at it from that perspective, yeah, range trade for now, eventually a break higher. And what does that do to the charts? Well, you know, before we leave the currencies, let's go look at the 2 major currencies inside the dollar index. One is the euro. The euro comes back into the big bar over here. That looks like it wants to try to bounce already, at least stymie this direct fall. There is an ABCD structure here. And I'm going over the currencies because the currencies are what's driving the markets. So there is this ABCD structure. It's probably going to get down a little bit deeper and then get some sort of a bounce. That's the euro. But the other big piece of this is the Japanese yen. And that thing fell through the floor today. So the yen last week, and I reviewed it on the Sunday show, the yen, not only does it fall and it breaks that low, it broke it here and it broke it on multiple time frames, and that was after consolidation in a downtrend. Consolidation was about 5-6 months. Does it blow it away? It blows it away and doesn't even look back. This thing is starting another leg down. Let's look at this weekly chart, and you can see it here. The weekly chart, big push down, consolidation, and here we go again, right? And if that's taking place, and if the euro follows, and both of these are doing QE out the nose, that dollar is going to go the other way, and that's going to put more pressure on equities. It's going to help those that are devaluing their currencies, and it's going to hurt those that aren't. That's the yen, that's the currencies, that's the backdrop of what's taking place everywhere else. So now, let's take that thought and let's move to our equities and see what they look like after today's drubbing. I'll be right back as we do that and try to decide what it all means going forward.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Okay, welcome back. As we come back here, I pulled up the S&P 500. And the first thing you want to notice on the S&P, I've got it on the daily time frame. The first thing you want to notice is this was the swing point that was broken on the upside. There's a neoclassical concept called retest regen. Essentially, it's anytime you transition, anytime you break a swing point, whether it's to the top side or the bottom side, when you get over it, if you come back and you come back within 6 bars, and that's exactly what happened, because not only did we come back within 6 bars, we came back on the very next set of bars. And then today, we definitely came back, right? And if you do come back within 6 bars, the probability of you not holding that retest and attempting to regenerate higher, that probability goes down. It goes down dramatically compared to what it amounts to if it's more than 6 bars. And so you're always looking at time as part, and it seems like the magic number for whatever reason is 6. You're always looking at time as part of what you're doing, because in technical analysis, there's really just 3 things. There's price, there's volume, and there's time. You have to use them all. And that's what neoclassical is trying to do, and it's based on probabilities off those 3 elements. This gets underneath it. When you get underneath it like we have here, you want to see it get right back inside of it immediately. That gives it at least the possibility of hanging here and maybe eventually going higher. But the fact that it got underneath it, and if it stays underneath it, especially 1 more bar, then that says that this isn't this way anymore. It's this way, right? It's a early warning that your trend is probably changing on you, right? Now, that doesn't mean that you've got a trend transition, because you don't yet. You have to break a swing point low. Where's the swing point low? It's right here. So in other words, you have to break underneath this area, and as you can see, we're not very far from it. We're coming back with some decent volume. Looks like the probabilities are decent that it might do that. So the next bar is the important bar. That bar comes tomorrow. That's where we're at on the S&P 500. If we look at the NASDAQ, NASDAQ didn't get to the highs, right? Has a swing point low right here. It's close to it. It is pulling back into support. There's really not much here to talk about technically, other than the fact that it did pull back after a push higher over there. And I said 2 weeks. You took away a week's worth of work. NDX looks just like the NASDAQ, really nothing there. But if we go over to the Russell, right, the small caps. Now the Russell gave us a sign today that it may be bouncing right here. And what is that sign? Well, two of them actually. One, when you're looking at the ABCD structure on the upside, which it had and which it completed, you're also looking at how it was constructed, and you had a nice hammer reversal on this bar, the May 12th bar. Top of that bar, 12.36.14. The low today, 12.33. So you get into that bar, and the volume is lighter as you come into the bar. The other bar that you're looking at is this big breakdown bar over here. That was 12.33.55. Where did it go today? 12.33.72. Almost into it. So in other words, what it's telling us is that this area right here is important. Right? You get a pullback, you come into an area of importance. You have more volume here than you did on the, you have more volume on the hammer reversal than you did today. And you have more volume back here on that big bar down than you did today as well. Not a lot more, but more. That says this is probably going to bounce for now and then potentially come on back and do some more damage. So it could bounce and then do this. Why do I say that? Well, because remember, this was testing into what? Bearish retest regenerate zones off of two swing point lows that were broken back here on this bar and on that bar. We broke this one. So the higher retest regenerate zone has now, return prices lower. We have a retest regenerate zone here that was broken to the upside. That was here as we got over it. So that turned us, again, let's draw this out, because that turned us from negative to sideways. And now the question is can this one regenerate us lower? And what does that mean? Well, it means taking out a swing point low. It couldn't do it today. If you bounce and come back down and take it out, then you can start doing some damage to the downside. Why do I think it's probably going to come back down? Well, because now the test is, we'll know pretty soon, because now the test is probably going to be right here. It's going to be right in that little area. And that's not that far away, and that's about where you would expect some sort of a turn back. So that's what I'll be watching the Russell as it bounces to see how it bounces. Does it have any juice going back up, and can it get back into these bars or not? If it can't, we're probably going to regenerate lower. So I probably misspoke a little bit. It's too early to know that. My inclination is that it's probably going to fail and go back down. I say that because, and let me flip to a couple other charts here. If I go to the sectors, now I want to show you something else here. If I pop over to the major trends, we don't have any huge damage yet. But what damage we do have is in a couple of areas. One is in the Russell, that's why we're watching it, right? Another one is the utilities, which is not so important to me right now. We've known this to be bad, right, which is energy. But the one that's really starting to show up as bearish, although it's not on the qualified trends, I probably should put it on there, that's the transports. Let's go look at the transports, because remember last week they broke down on multiple time frames, and today they extended. So they break here, right? They're gonna extend the break. You already had the break there, right? Today you get the extension to the downside. Why is it important? Well, if we're not moving stuff around for whatever reason, especially, right, these companies aren't doing well, especially when energy costs, their main cost in most cases, has diminished significantly, then something is wrong. Something is definitely wrong. And so when I look at this chart and I go here to the weekly and see the break point here that broke last week on volume, and I've already told you, as we talked about on the weekly show Sunday nights. In case you don't join me on the weeklies, you should. This is the area it's going to try to get back into with a major, quote-unquote, major sector breaking down. Question is will we see others follow? We don't have evidence of that yet, but my suspicion is we probably are going to get that evidence over the coming weeks. So that's where my head is with respect to that. Before we go anywhere else, though, let's go to the world markets, because the things that are driving these markets, first, currencies and bonds. And the bonds got a bounce today, but still, that's just a bounce. And then it's the world markets. And where are the world markets important? Well, it's Europe and Asia. And if we go to Europe, here's the CAX. CAX comes down, volume doesn't expand. This looks like a bounce setting up. They could come into this big bar here. They could just come into that one. That's where they got to today. And so if I highlight where you could get the bounce from, it would be from here. And guess what? They came into it. They have a lot less volume. So it wouldn't be surprising, is this bar, it wouldn't be surprising to see some sort of a bounce out of here today. Now, if Europe is able to actually get an ABCD structure higher, it would be a big deal. But I think the issue here isn't that. I think the issue is, just like on the Russell, you came into a key retest regen lower. Question is it going to regenerate lower or not? And the reason it was key is you had this high, this low. It came in there, stutter stepped, came down. Question will be, what does it do when it comes back up here? Because I suspect it's going to get back up there. Whether it comes a little bit lower first into this area, or whether it just gets up there, that's going to be the test. And that's where we're going to find out how this range develops. And remember, these are ranges these are trading in. So we have the top range, right? And we have the bottom range. And right now, it's holding into the top range. Barely. Question will be is, does it get into the bottom range and stay there? My guess is it won't now, but it may later. We probably get a bounce first, and then we'll see if it's going to or not. That's the CAX. That's the stronger of the two. If we go to the weaker sister, which right now is Germany, Germany's painting a little bit different of a picture, because if you remember here on Germany, Germany had not broken above the retest regenerate zone. It got right to the top, and we're talking about a bearish one here. Got right to the top, failed, and came right back to the low today. Now, the good part of it is it's coming back into an area that should see some buying support. That's where it almost got to today. So we're probably going to see a bounce out of here. Maybe we start lower and then bounce. Also looks like a bounce out of here. Then the question will be the same question, and that is what happens when this pushes? And actually this has, I didn't notice it before, but this had an ABCD structure already that just finished. I missed that on my earlier thoughts. So we already had the ABCD structure finished to the upside here on the DAX, on the daily. So it's coming back. Now the question will be is, where does it find support? I assume it's going to find it right in here. And does this get up here, or does it fail here? That will be the big story. Now, the strength is in Asia. Let's go to Asia. We already talked about the Nikkei. Nikkei today, of all things, the Nikkei couldn't get any more juice out of that huge fall in the yen. Does a doji at the top with no volume. That looks like it's begging to come back for a bullish retest regen right here. I expect that's probably going to unfold despite that drop in the yen, which is interesting to say nothing, because so much of this fueled run was directly correlated, as I showed weekly on the weekly chart, directly correlated to the yen's drop. So if this can't move higher on a continued drop in the yen, then what's going to move this market higher? If that's true, that's a problem. That's a real problem. If you can't devalue your currency and get your equities to move higher, something's wrong. The one place it does keep moving higher, though, is Asia's China. SSEC, the composite of the Shanghai, just keeps going bonkers to the upside. The Shang Seng is doing the same thing. Volume continues to expand. I showed members this morning an intraday chart. Nothing wrong there. I expect these guys are probably going to go higher as well. Now, if Asia is going to continue higher, or at least if China is, are we really going to see a big pullback in the rest of these markets? I suspect not, but at the same time, what if we get some sort of blow off top here and then we get a big drop? Or what if that yen can't drive Japan higher? Or what if there's some sort of a political situation, geopolitical, or there's any myriad of things that could take place? Right now, markets look like they're going to bounce. How far? That's the question. My sense is they're not going to get far. The yo-yo market, the roller coaster market that I talked about 2.5 months ago, still in effect, still in place, still happening here. The money's elsewhere. I've said that for a while. It's still true. I'll see you tomorrow night. Have a good one. Thanks.